Gold, the world's oldest symbol of wealth, security, and power. But what if one day the gold market crashes? How would that shake the world economy? Would currencies collapse? Would central banks panic? In today's deep dive, we'll explore what happens if gold suddenly loses its value, and why this shiny metal holds such incredible power over global finance. Stay till the end, because the answer might surprise you. For thousands of years, gold has been more than just a shiny metal. It's been money itself. Before modern currencies existed, gold was the global standard of value. Empires used it to back their coins, and later, entire financial systems, including the US dollar, were built on gold reserves. Even today, gold remains critical because of three key reasons. 1. Store of value. Gold holds its worth when currencies fall. During inflation, war, or financial crisis, investors rush to gold for safety. 2. Central bank reserves. Over 20% of all gold ever mined is held by central banks, like the US Federal Reserve, the European Central Bank, and the People's Bank of China. It's their insurance against economic collapse. 3. Investor confidence. Gold prices reflect fear and trust. When investors lose confidence in paper money or markets, gold prices soar, signaling global anxiety. So, if this foundation suddenly crumbles, the consequences could be enormous. A gold market crash doesn't mean gold disappears, it means its price collapses dramatically. Imagine gold falling from $2,400 an ounce to $800 in a few months. That's a 65% crash, similar to what stocks experienced during a major recession. Why could that happen? Massive overspeculation. If investors start treating gold like a get-rich-quick asset, bubbles can form, and when they burst, prices crash. Strong global dollar. If the US dollar becomes too strong and interest rates stay high, investors may dump gold in favor of bonds or cash. Technological disruption. If new materials or digital assets, like tokenized commodities or stablecoins, start replacing gold's traditional role, demand could plunge. When demand falls, central banks and investors would start selling, creating a spiral that pushes prices down even more. A gold crash would send shockwaves across global markets. Let's break down the impact sector by sector. 1. Central banks and national reserves. Central banks hold trillions of dollars worth of gold. A crash means their reserves lose value overnight. For countries like Russia, China, or India, where gold makes up a big chunk of reserves, their balance sheets would weaken instantly. They might be forced to sell US dollars or print more money to stabilize their economies, triggering currency volatility. 2. Currencies. Traditionally, gold prices move opposite to the US dollar. So if gold crashes, it often means the dollar becomes stronger. That's good for Americans, but terrible for emerging economies that owe debt in dollars. Their debt becomes harder to pay, creating financial pressure globally. 3. Stock markets. A gold crash could boost confidence in riskier assets temporarily, like stocks or tech companies, as investors shift money there. But if the crash signals deeper issues, it could spark overall market panic, especially in mining, jewelry, and commodity sectors. 4. Mining and employment. Gold mining companies would face massive losses. Thousands of jobs in Africa, Australia, Canada, and Latin America could vanish. Smaller economies that depend on gold exports, like Ghana, Mali, or Peru, would suffer serious economic downturns. 5. Commodities and inflation. Here's the twist: gold doesn't produce anything, it represents trust. When that trust breaks, other commodities like silver, platinum, or even cryptocurrencies might surge as alternative stores of value. Inflation could rise or fall unpredictably, depending on how governments react. The world economy is an interconnected web, and gold sits right in the middle. A sudden crash would trigger ripple effects through multiple systems. Foreign exchange markets. Investors would rush between currencies, trying to find safety, causing wild fluctuations in exchange rates. Bond markets. If gold loses its safe haven status, government bonds become the next refuge. That could push bond prices up and yields down, affecting global interest rates. Cryptocurrency market. Digital gold, like Bitcoin, might suddenly become more attractive. Investors could flood into crypto as a new hedge, possibly creating the next speculative bubble. Consumer behavior. A fall in gold prices could make jewelry cheaper, boosting demand in India or China temporarily. But the luxury market overall might suffer as wealth perceptions shift. Gold isn't just an economic asset, it's psychological. When people see gold crashing, they lose faith in what they believed was eternal value. That can create a chain reaction of fear. Public confidence decline. Investors may question the stability of financial systems. Panic could push people toward cash hoarding or digital assets. Political pressure. Governments might face unrest as citizens demand explanations or protection for their savings. Some nations could respond with capital controls, limiting money movement, or by tightening monetary policies. Shift in global power. Countries with less gold dependence, or those heavily invested in technology or digital currencies, might gain an advantage. The US, with its dominant dollar system, could temporarily strengthen its global influence. In the long run, every crash reshapes the system. A gold market collapse could accelerate the transition to new forms of value, like blockchain-based currencies, carbon credits, or digital commodities. It could also push for more sustainable mining and force governments to rethink what wealth really means in the 21st century. Ironically, once the panic fades, gold might slowly recover. Because no matter how advanced we become, humans still trust something they can touch. A gold crash would shake the world, but it wouldn't end it. It would remind us that value isn't just in metal, it's in trust, systems, and human belief. The question isn't what if gold crashes? It's what will we trust next? What do you think would replace gold if it ever lost its value? Comment below and don't forget to like, share, and subscribe for more deep global insights.